Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making them move, and what to expect for the future. Today is April the 21st, 2023. It is now 3:49 p.m. Central Time, 11 minutes before the mortgage-backed security and bond markets close for the day and for the week. Now, what usually happens on Fridays? If you watch this show regularly, you should probably know that we tend to see banks take some chips off the table, pull back a little bit on their pricing, don't give us as much benefit as maybe they could have when it comes to the rates that we're actually offering to our consumers. The reason they do that is because the bond market is very volatile and mortgage-backed securities are a bond. They're based on the bond market. So if over the weekend something happens that affects the bond market, say that there is some sort of declaration of war somewhere in the world, anything geopolitically or anything else, bank failures, things like that, like we've seen over the past year plus that you've been watching the Brent Bruce Daily, you know that it affects mortgage-backed securities. So if it happens on a Saturday or Sunday, it's going to hit us like a train on Monday. We don't have any time to react on Saturdays and Sundays because the markets are closed. That's why people tend to take a little bit of a step back on a Friday. So let's take a look and see where we are right now. Okay, we are at exactly zero on the mortgage-backed security right now that we have been following. We're up 3 basis points on the 10-year Treasury right now at 3.566. Now, just a bit of a reminder that in a traditional market, when things are calm, mortgages should sit about 2% above the 10-year Treasury. So if all things were equal and how they should normally be, our 10-year Treasury regular 30-year fixed mortgage would be sitting at about 5.5, 2 percentage points over the 10-year Treasury. That's a good kind of benchmark that we like to look at. Now, as you know, we are not sitting at 5.5% right now. And there's a number of reasons for that that we get into from time to time on this show, but we're not going to do that today. So, right now, we are coming up here, hitting up against not just one, but really four. We have essentially four ceilings of resistance that we're going to face very soon. And this is really interesting, guys. Take a look here at what we've got coming in front of us when it comes to technical indicators in ceilings. This is going to be an interesting thing to see. So we are coming up against the Fibonacci level, the 100-day moving average, the 25-day moving average, and the 200-day moving average, which, as you know, we have not been able to stay above the 200-day moving average for almost 2 years. We have not been at a point where we were staying above that number. It has been a very long time. So think about how much steam we're going to need to have to break through all of these technical indicators, including the 200-day moving average. It's going to take a lot. Now, what is coming that might break us through? Well, we have the consumer or the personal consumption expenditures report coming out on the 28th next week, and then the remarks and the moves by the Federal Reserve on the 3rd of May. Those two things, looking forward, probably are not going to do what we need. They're probably not going to be enough unless we have some just unbelievably low core reading of personal consumption expenditures, which no one is really expecting right now. We're expecting it to be kind of in line with expectations at 0.3, 0.4, somewhere in that range on the core reading. Now, the headline number is going to come down a lot because we saw the consumer price index headline number come down a lot back on the 13th and 14th because of the cost of fuel. That's why we saw that number so low. So more is to come here in the May timeframe when we start to feel we feel more of the effects of the cost of housing coming down. That's what we're really going to be starting to look for. And overall inflation is really going to start to subside and show on the May reports, which is probably where we're going to get the steam that we need to break through those levels and really begin to see improvement. Like I talked about earlier in the year, back in January, that we should be in the high fours, low fives by July the 1st. Guys, it's coming fast. So we're going to have to see some real moves here before we can hit that kind of a number. Where are we on our Brent Bruce Daily home loan interest rate right now? So on our conventional 30-year fixed mortgage, which is our very well qualified 800 FICO score, 25% down conventional home loan. Make sure that you like, subscribe, and share, and hit that notification bell up in the corner to get daily updates on the real interest rates from a mortgage broker, not a banker, not a bank, an actual broker where we have lots of options to look at and the real numbers. So right now, Flagstar Bank is leading the charge on our no point loan, 6.625, small credit of $313. So we can open this up here and see. We like to take a look and see what it's going to cost to get to a 5.999. That's kind of the number we've been looking at daily here. Well, they don't offer a 5.999. They offer a 6.0. That's close enough. 1.5%. So for 1.5%, we can get to 5.999 with Flagstar. Let's take a look at 11 for 1.626. So they're a little bit more expensive to get to that 5.99 right now at 11 mortgage, and then United Wholesale in order to get to that 5.999 there at 1.074. Not a surprise that United Wholesale is leading the charge. Now, once again, as you're looking at these banks, understand, guys, that you cannot go out and get these interest rates. These are the rates I get as a broker and that I can pass on to you. We're going to have to do a longer report on what is the difference between a banker, an actual depository bank, a mortgage banker, and a mortgage broker. And really, it all comes down to where they get their money. So we need to understand that in order to understand the benefits and advantages and disadvantages to all three of those. I've worked for all of them, and I can definitely tell you the real insight of who they are and how they work. So that's what's going on right now. Again, make sure that you like, subscribe, share, hit the notification in the top there, the notification bell. Have a great weekend. I will get to you back to you on Monday.